Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. No, what's it called? Do-rag? That's what you said, right? All right, everybody's got their do-rags on. I guess, is my do-rag. I don't know. Oh, now I'm just being stupid. All right, yeah, let's get on with this. Welcome to FOMC Day, Fed Day, Fed Day, Fed Day. Tastes great. Fed Day, Fed Day. Can't wait. I think we're probably going to not bother with the after party show today, because on Fed days we like to load up the I don't know, what do we even call this? We don't call it a hangout. What do we call it? I don't know. YouTube. And that's assuming, of course, we still work with YouTube down the road. Um, Group meeting, whatever, through the Fed announcement. And then we all like to sit and I think, as Adam calls it, the cheap seats, sit in the cheap seats and throw peanuts at Chappelle as he barks away about how they're theoretically in control of the situation, and what their great words of wisdom are to the public about the cost of money. We'll do a little daily summary here, video here for you, probably maybe half an hour or so. Bark about a little bit of the various different things that we're doing in the market, and then we'll reload everything up and do, I guess, maybe we'll even do it as a public broadcast, the FOMC event, which is in about 2.5, 3 hours, somewhere in that neighborhood. So you get a double dose of TRI here today publicly. And then this evening, Wednesday evenings, we have the Coinigy show, which I'm actually pretty pleased that we got up and running again. I do like sort of partnering with outside people. Let's see, where the heck do I have it here? I'm never sure what button I'm supposed to push here, but I did retweet it. Here it is. Coinigy says, we are back with Brian for another episode of Bitcoin and altcoin trading talk at 7 o'clock Central Time. I guess that's 5 o'clock Pacific, 8 o'clock Eastern Time. My apologies to the Europeans. It's kind of a bad time for you guys, I know. I'm sorry. But anyway, the point being that super excited we got this show back up and running. And Joe actually is a really, really good sort of, almost like he is a very typical sort of public participant. And as I've been sort of walking him through the basics of what we do, buy down markets, sell up markets, basically act like institutional players versus the public, which buys up markets and sells down markets. And it's actually fun. It's I think it's a really, really good sort of illustration of how somebody from the public who doesn't really know the markets, I can just slowly walk them through and get them to the point where I think they can make relatively educated decisions. And I quiz him constantly about little terms and stuff. So if anything, if you're watching this video as a public participant and you're kind of like, yeah, I do like the idea of just of there being sort of almost like I certainly don't want to be insulting or pedantic or anything along those lines. But think of me as almost like you're like sort of sideline coach, and you guys are coming along. You're trying to learn gymnastics or tennis or tiddlywinks. It doesn't really matter. Brian's sitting on the sidelines, just saying, hey, watch out for that. And maybe let's pay attention to this. And I like the rapport that Joe and I have. It works really well. So actually, I'm super excited for this. I think once we sort of get our rhythm going and we get into a pattern, and we're both sort of comfortable with the routine, we might bring on some of our previous show co-hosts, Chris, Derek, Ben, Paul, as a complement. And then also too, maybe we might even reach out to other communities. For instance, Colin from Hero, he's actually asked me to come on and talk with his community tomorrow. So if you are a member of that community, watch out. I'll be on his broadcast, I think somewhere around 11 a.m. Pacific time, which I think is about 2 o'clock Eastern time tomorrow, before I take off and have an afternoon with Liam. So, as we go forward and get sort of comfortable in this routine, I'm also super excited at the opportunity to sort of demonstrate how you can use the Coinigy platform to manage your portfolios if anything, what I'd like to see is Joe actually take like let's say, they could fund an account with $500 or just a demo account, $500, doesn't really matter. And let's try and ramp it up, and let's try and make Joe rich over the next couple of years. I think anybody can do this. And like I said, I think Joe is actually a really good example of somebody who's incredibly intelligent, is heavily involved in the crypto sphere, but maybe doesn't have any sort of education as to like, how do you trade? How do you set yourself up for success? What are these things called setups that you talk about? What are some of the criteria that we should have? And at some point down the road, I'd actually like to see Joe actually, and this is my goal for every single student that comes into this school program, is you actually become a better trader than the old man. And you start trading circles around me. I'd love to see that. So anyway. All right. So point being, we've got this coming this evening, and we have the big FOMC sort of public broadcast in about 2.5, 3 hours. So just be aware of that. This broadcast, because we do have this Fed event coming ahead of us, it's very dangerous to interpret too much ahead of the fact. Everything will be thrown into chaos through that Fed event. And frankly speaking, if you're relatively new to this game, you're probably best just to hop off onto the sidelines and just watch. We have a rule that just simply says, you are not allowed to believe anything that you see in the market for 1 full hour following the actual Fed announcement. And what's interesting is that so many sort of old timers, follow this rule, that at some point the Fed said, well, if nobody's going to do anything for like a full hour after we make the announcement, we might as well have like a press conference or something to fill the time in. Now, I don't think it's a good idea for Fed officials to be talking as much as they do these days. Alan Greenspan himself was famous for saying, if you actually think you understand what I'm trying to convey, then I'm talking too much. I'm saying too much. And, to be perfectly honest with you, these Fed officials over the past few years, they could not be more wrong in their predictions of what's going to happen in this world. Just blatantly wrong. And then listening to like Granny make predictions. Well, there'll never be another banking crisis for as long as we live. Oh, how's that going, Granny? Nice call there, buddy. And then the worst part about these quasi-government officials, and I guess technically as a Treasury Secretary, she is a government official. Does anybody ever hold any of these people to account for the absolutely brutally wrong opinions that they have, that they spout out, that, oh, hey, look at me, I'm a big government official, so my opinion obviously is more important than yours, blah 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 blah, whatever. In fact, actually, I was a little surprised recently. I was, I don't know what it is. I don't think these people have that much actual market experience. Like I actually consider myself a student of the market. So not only the fact that I have practical 35 years experience playing this darn game, um, I'm also I consider myself a student of the market. So I've like studied in depth, what was the market through Eisenhower's presidency? What was the market like through Coolidge's presidency? What was the market like through Abraham Lincoln's presidency? I mean, I love history and I love market history. And one thing I can absolutely tell you is when the public, and I hear a lot of people talking about, well, we've got a commodity super cycle. And of course, the gold bugs, they all go crazy when they hear this. And it's just music to their ears. And they love this stuff. And it becomes this circle jerk. And yet, you actually look at the price charts themselves, actually look at the price action, and they are saying the exact opposite. They are like this crude oil market is screaming top. I mean, what are we supposed to think if you ever see the market smiling at you? So, what a big surprise we got. And actually, frankly speaking, it's quite shocking to see how dramatic this is. But like crude oil's fallen like $10 here in the past couple days, just boom. But if you see that big fat M staring you in the face, you probably should be thinking that. And in the face of this, you get all these social media people that really don't have that much experience in the market. I mean, maybe, they've been running social media channels since the start of COVID. So that means obviously they're market experts, going, well, this is the beginning of a new commodity super cycle. We're going to the moon. When the market itself, just look at the image, it's staring you in the face. And the interesting thing is now you can start to see it in the grain market. Here is the beloved wheat market. Again, if you see the market smiling at you like this, you probably should be thinking down, not up. And you might even argue that, okay, maybe that was the commodity super cycle and it's done now. So, and actually, we had our stock pickers club meeting last night. And interestingly enough, now they actually have like the ETFs. There's an ETF for everything nowadays. So they actually have an ETF for the soybeans, the soybean fund. And frankly speaking, I think there's a short here just developing as we speak. I was like quite impressed. We went through all the numbers. It does meet TRI's secret options formula criteria. Might even be interested to see. We have actually a brand new course at TRI. Anybody who's an alumni would like to participate, you're more than welcome. But the course is starting here in the next week or two. So you better get your act together and reach out to me all about spread trading and, say like buying something like the 24 put and then selling like the 21 put so that you reduce the cost of ownership. And you'd be taking profits at the 50% level anyway. So you don't really care whether the position is called away from you below $21. But the point here is that it looks to me like that, actually taking short bets in these commodities actually, to me, makes a lot of sense in here. Go figure, right? You might be a little bit late, granted, and we'd be wanting to look for counter trend rallies. But I mean, the irony of it all is that are we supposed to be doing something in the month of May? I don't know how the hell that saying goes. I think somebody said something about the month of May. And the irony of it all is that saying actually comes from the commodities industry. So it's laughable when I sit and listen to these people on social media getting all the public all riled on the bull side about investing in commodities right now, when this is actually the exact time of year when you should be like, whoa, I mean, I was a commodities broker, and for years and years and years, we did you buy your own lead in the middle of February, you sell it the middle of May. Oh, here we are, the month of May. You made money 9 out of the past 10 years, blah, 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 blah. So anyway, that kind of jumped out at me. I mean, I'm seeing these M's in the commodities market right, left, and center. They're all over the place now. I don't think it's a good idea to come in and short crude oil here now. This is the end of the whatever this move is. When you see the market fall $10 in like 2 days, it's not the beginning. But I feel badly for the public who got sucked into, buy my newsletter. We're into a commodity super cycle. Have I got you super excited, super jazzed? Yeah, 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 yeah. And then they get handed this kind of image. And oh, by the way, and your account is gone. Because keep in mind, in the commodities industry, woo-wee, you can lose a lot of money really quickly. Anyway, there's a fun little rant to get your day going. 16 minutes past the hour. Like I said, it is a Fed day, so I don't really want to get too wrapped up in the short-term price action. We'll have lots to talk about through the Fed announcement. And if anything, I think I'm hearing that the consensus basically is that they are expected to raise rates. New York Times, right? Front headline news say Fed expected to raise interest rates. So I think the market's sort of getting ready for that. But if anything, this is actually a good sign, to be honest with you. Because although, what did I do with it? Oh, I've got the, hey, there I am. Hi. Jeez, nasty looking motherfucker. There you go. Look at that crude market, eh? Woo-wee, what a mess. Anyway, what are we down now? Down $2.82 right now. If anything, and actually this is a little bit of a warning sign, right? They always say that if it's sort of like buy the rumor, sell the news. So could be the other way around. Sell the rumor, buy the news. This is why we say you don't really want to see the market rallying into a Fed announcement. That's usually not a good thing, because on the other side of it, oh boy, all hell's going to break loose. So if anything, it's not the, if anything, I'm relatively okay with like the ES sitting up like 0.1% and the actual Dow down like 0.1%, and them just going sideways. If anything, I wouldn't be surprised that following this Fed announcement, we actually see some sort of big counter trend rally in the oil market, because like I said, fallen $10 in 2 days. Wow, boom. And I wonder whether the public is walking into a trap with the gold market here. This looks a little dangerous. They're rallying the market up, so you can definitely say that the market will not be oversold anymore. And of course, we do the crazy things like reload zones, and oh, hello, you can see we're just now entering our reload short zone. So we could get some sort of insane spike through that Fed announcement, and that actually paints some sort of top, and then the gold market has to work its way back down for a while. So be careful here, folks. This is more of a day trader look, looking at the 4-hour chart. We did have some interesting levels. Here, next key level for the day traders is probably going to be a play against these highs and the ATR level. You see 88.6, there's a 2.618. I wouldn't be surprised if there's some sort of spike through that Fed announcement. We'll watch and we'll see what happens. But then once that's done, oh boy, look up below. Anyway, we'll cross that bridge when we come to it. We did have a stock pickers club meeting last night. And actually, there were a couple of really cool ideas. Actually, I put this tweet out yesterday, and what a great analogy of everything I do. And I put the tweet out and I basically said, print this off, practice this with your family. And I even did kind of like the really sloppy writing. Get your kids to do this, because again, 4-hour chart. This was the way a day trader would sort of set up their day. Where are levels? You always want to start with location, 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 like they say in real estate. And I think you can make the argument that's an interesting trade location. And of course, that's an interesting trade location. So if we can get bearish divergences developing in short reload zones and then a big fat M develop, well, that's a trade setup. Same thing on the other side. If we can get bullish divergences developing in reload zones, candle body lows for trade location, wicks and tails like to be eaten, yada, 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 horizontal support and resistance, and then a big fat W on the other side of it, that's a buy setup. So this is actually really, if you are a parent, take a screenshot of this. And if the best thing you could possibly do for your kids, because they'll never learn this in the public school system. And Joey Diamond does not want people like me showing the public this, but this is the secret to basically the way the damn capitalist system works. Sell against highs, buy against lows. Anyway, kind of that happened to be on the screen, so I got off on a bit of a tangent there. Sorry, everybody. I actually really wanted to buy one crypto. Look at most of the cryptocurrency market is down right now. There's one cryptocurrency that I want to buy, and it's driving me crazy because the damn thing keeps moving up. This darn CPL. I mean, look at this. This is exactly what I just showed you, right? There is reload zones, right? We'll pull up there is the bullish divergences on moves to new lows, and there's a big fat W, and this darn thing keeps moving up. And I can't get filled. Driving me crazy. So, I mean, that's just living physical evidence of exactly what it is I do. And then, where I was going with all this is we do have a stock pickers club at TRI. And actually, there's a few names that I'm very interested in. I haven't done too much stock purchasing recently. So this is an interesting one, lithium names, because if you notice, here is May, reload zones. Is this a risk worth taking? Maybe. Notice, look at May. Look at last year, right? This beautiful bottom, and then through the summer, woohoo, big rally. Previous year, there's May, nice bottom, woohoo. This year, not so much. This was the sickness year. Or actually, no, I guess that was 19. But where's April, May? Market tried to break up, but didn't really do a hell of a lot. So I don't know. I was sitting here in the club last night. We got a nice little double bottom in reload zones. And I went and picked up a little bit of this thing. Yeah, it might crap out. I don't take really big risks in my registered account. I think it was like $500 or something. Well, we kind of like that name. That was an interesting idea from the club last night. Do your own due diligence. I've told everybody repeatedly, you always hear this from me, I'm never going to tell you what to buy or sell. I'll tell you what I'm doing. And actually, most Wall Street people don't even do that. Or if you want to know what they're buying, you better buy their newsletter or whatever. I'm just an open book. I don't really care. Picked up a little bit of this, IZEA, interesting looking chart. I mean, you tell me. Am I coming in at the bottom end of the range here? I think so. Have I got an interesting looking little W to work with here? Down, up, down, popped up through here. Looks like it. Might be a little bit early here. Usually there's incentive for these guys to get these stocks back above $1 because of NASDAQ listing requirements. So me coming in here at 60 cents, it's not a terrible idea. Could this thing just flounder around here for the next couple months as we go through the May, June swoon? Sure, that wouldn't surprise me. This is actually an interesting proxy on sort of the online retailing business. Think Amazon, Google, Microsoft and stuff. And as Microsoft, I think Apple's up today as well, broke a short pattern that we had working for quite a while. So if those stocks are happier, then I could see this little guy sort of perform. But again, I'm not touting. I'm just telling you what I'm doing with my money. Picked up a little bit of that, picked up a little bit of that. And then I picked up one other one out of the meeting last night. I was really impressed with the price chart. It was a pharma name. I think it was called like Fulcrum. Here it is, FULC. Same sort of thing. Look at that chart. I mean, I buy W's. It's just what I do. If you saw a chart like this, and then you came and said, well, Brian, you didn't buy? Why didn't you buy? If anything, you'd be like, well, this guy's a hypocrite then. But so, I mean, there's a big fat W. I have to buy it. It's almost in my DNA. I have no choice. Again, don't take big bets. I just throw like $500 at this thing. You can see I paid like 280 something. So that means like $5, 5.5. You can see this huge gap in here. That gets my double. I mean, if it pops up and fills this gap in, which I think is very likely, then, obviously huge amount of doubles. So my number one priority for me always, whenever I buy these things, is if I can see a double, out goes half, get my original capital, put it back at the money market fund and just let that, collect interest, whatever. And then I'm riding free stock or free crypto or whatever. That's always a priority for me. So coming out of the TRI Secret Options Formula Club meeting last night, actually, I did a little bit of buying, which I haven't really done too much. I wouldn't, for the public, I would just generally say, yeah, maybe, let's get through May, June here. But as I said before, I buy W, so I'm perfectly fine buying this. And if this thing has to flounder around here for the next little while, that doesn't bother me at all. But that's because of the way that I've built my trading plan. Nanny nibbles, I take very small bets relative to the entire asset sort of pool that I work with. So anyway, nice little free content there for the public. Do with it as you please. No guarantees from the management. Do your own due diligence. I'm not touting. I'm just showing you what I'm doing with my money. I suppose broader metric, actually interesting. We have been talking about this US dollar index recently, and the fact that we do have an Adam and Eve, or maybe an Adam and Steve working, did break out the other day, but interesting how the index is coming off material here. I think everybody in the market is expecting the Fed to raise rates. I guess the question really here is, what's going to be sort of the rhetoric coming out of the other side of the meeting? Now, remember, this is a Fed day. So actually this candle itself is almost irrelevant the way that it is right now. You might find in about 3 hours by 12:30 Pacific time, this will look completely different. I don't know whether it breaks up to the upside or the downside. I will say risk takers, this isn't a bad window. Coming in anywhere sort of in this box, that is your risk window. If we break to new lows, then obviously the long thesis is negated. And really, you might even argue test of the highs. Anytime I can get a risk box that's substantially lower than the reward box, I'm interested. So, if we got the market even just to finish here today and then paint a nice little inside bar tomorrow, beep, and we get a nice little inside bar reversal or Harami or something like that tomorrow, holy moly, that would be just a killer trade because the Fed would be behind us. So anyway, as I said, because it's a Fed day, I don't really want to interpret too much into what I'm seeing here in the short term. All I'll simply say is, just go slowly here. Let's let this Fed get out of the way, and then let's start making decisions. Finish off this free broadcast, just quick boo at things like crypto. Let's just keep this broader market message in mind. Market was 15 and change. We rallied up to 30. So technically the market has doubled. Could we pull back into Colin's pump chaser zone? I'm going to be on Colin's show tomorrow. So if you guys are fans of Hero Exchange and all that, maybe we can get a link from Colin if you're watching. Maybe we can tell people on the TRI site about that, and they can participate in the call as well. But could we get, 50% rule? This is WD Gann 101. He would just simply say it's very natural for markets to retrace 50% of their previous move. So just understand there is a bit of risk involved in crypto right now. It's not like we're right down at the bottom end of the range anymore, folks. And I might even argue this is a weekly chart, so it goes slowly, but you should all be able to see this. Up, down, up. If we roll over and we start closing below these letters or these levels, you can see what's happening here. Remember, we talked about commodity super cycle. What are we supposed to think if we ever see the market smiling at us? So be careful here, folks. Names that I do like, I like this C pool because it's putting in W's, and it's substantially off of its highs. Could this thing though just flounder around here through the month of May and June? Usually, just FYI, and then maybe just write this down on your notepad, your journals that you should all have out here. Usually the market likes to turn this last week of June, especially heading into the American July 4th holiday weekend. If the market's really down and really sad and stuff, the Americans, keep in mind they're capitalists and all that kind of stuff. They kind of wrap their arms in the flag, or I guess wrap their bodies in the flag, and It's un-American to short, right? You'll actually start hearing politicians and stuff getting angry at people that are shorting the market. So, I don't know whether you really want to buy this clear pool or not. It certainly isn't a recommendation. Of course, you heard it before. I'll say it again. I don't tell you what to buy and sell. You do with your money what you want to buy and sell. I think here's another sort of a different view of that Bitcoin chart. And I even tweeted this out and said, bearish setups are starting to set up. Don't fight this. This is another good example where social media people, the people that really haven't been trading that long, they'll come out and they'll say dumb things like, well, technical indicators don't matter. The fact that RSI is in massive divergence here with price, don't worry about it. Just buy and you'll make tons of money. Buy my newsletter, right? And join the circle jerk. You better get a big thing of Vaseline because, man, we are, really don't want those friction burns. They're no fun. Anyway, yeah. Are we at a half an hour? All right. Thank you, Chris. So just be forewarned, right? There's that 50% rule that I was talking about earlier. If we do M out here, chaos theory, fog and bombs just so happen to line up perfectly with trend lines. All right. So, Josh, wait, it's friction burns. What the hell we got going on? Vaseline? What are you talking about? So, just respect the fact that there are, I don't know how you say this. There is anecdotal evidence building that maybe we need to take a bit of a pause. We know about the seasonality of markets. We know about Mr. Gann. We know about chaos theory. We know about reload zones. We know about institutions buy down markets, sell up markets. So, just go slowly with your money here. Probably, and of course, does that really sell newsletters? If anything, I'm the wet blanket that just sort of says, better safe than sorry. I don't like to lose money. It's just that simple. I do not like to lose money. So if I see a situation like this, I'm not going to go running in all full bore on the buy side here because I personally see that there is a pretty good chance that you're walking into a trap here if you go and buy. Now, how can we break that? Well, just give me a pattern where I get one low, two lows, three lows, and then we start turning back up, and I've got lots of defense. If I go and say buy this level, I got this stop to help defend my trade. I got this low to help defend my trade. I got this low to, okay, fine. Then we can start talking about trend continuation patterns. But for the time being, I have to be in defensive mode. We have the FOMC, which, I've shown you repeatedly. The market loves to rally into FOMC and then dump on the other side. And then we also have this big, ugly lunar eclipse. And FTX happened through a previous lunar eclipse. Luna happened through a previous lunar eclipse. What is the other big sort of social media circle jerk, Josh getting his Vaseline out, crypto story that could potentially have the wheels fall off through this? Is it Gensler officially declares war on CZ? That's definitely floating out there somewhere. I don't know. If anything, maybe in the comments and the feedback, post your ideas. And like I said, we're going to have our crypto show tonight. So we'll have, good 2-3 hours to talk crypto out the butt. And then also, too, we'll see the market on the other side of the Fed and what the market looks like following the Fed announcement. But should make for a lively conversation because I'd like to hear from you guys. You guys are really, a lot of people that watch my videos here on social media and stuff. Obviously, you're very in tune with the crypto space. And you guys, if anything, are going to know what are the sort of Achilles heels in crypto right now that could turn into disasters. And I'd be very curious because we are coming into a very typical disaster window for the market. So what are the potential problems? And like I said, at any given point in time, I would not be surprised if the Americans declare war on CZ. It wouldn't surprise me. Obviously, it's just purely my opinion, but just be forewarned. You can kind of see the writing on the walls here. So anyway, we'll see how that goes. Okay. I think we'll leave the free video at that. Like I said, we'll load up the FOMC video in about 2 hours, and we'll have a lot of fun chit-chatting through that event. And it should also be a good education for anybody who hasn't seen how the market acts through Fed events and why it's critical not to do anything for 1 full hour following that announcement. All right. Have yourselves a great day. PMA for the win. Hit the like button if you could. I see there's like 40, 50 people over there, and we got 14 likes. So if I said anything that's of any value to you, help the channel along. We're really trying hard to get the sort of the Google, YouTube algorithm happy with us. Trying to refrain from swearing as much as I usually like to swear, because remember, I'm an old gnarly commodities broker. I'm renewing my notary license on a weekly basis. PMA for the win. All the best. And I guess I'll see everybody here in a couple hours for FOMC. Only everybody is at this point is a bye for now.